This is Afroeconomics with J.B. Bryan. Afroeconomics is a strategic financial management program designed for the advancement of Black wealth in America and abroad.
Welcome to the Carl Nelson Show on Washington, D.C.'s 1450 WOL Radio and live around the world on WOLDCnews.com.
And thank you for checking in with us, folks. We hope your day is going great so far. Later, Professor of Critical Thinking, Dr. David Horn, will be here to examine the presidential candidacy of Senator Kamala Harris. Some say she's not black enough. Anyway, Dr. Horn will define just how black should one be. But before we get to Dr. Horn, financial advisor J.B. Bryan from Afroeconomics is here right now, and she's going to explain to you why your tax refund this year may be less than last year. J.B., welcome back to WOL Radio.
It's good to be here, and I am black enough. Yes, indeed.
Okay, you're already black enough, right?
There's no question about it.
Yeah, it's sort of a silly discussion, but we're going to get into it, though, because some people are really into it. You know?
Yes.
It's what Dr. Anson calls these horizontal issues that we should bypass. But anyway,
yes,
let's talk money.
Definitely. And this is indeed another topic worth talking about with just so many calls that I've received, as well as you've heard, just people wondering why their tax return looks so different. And Carl, I have noticed that the biggest difference is that when the tax laws were changed and the tax brackets were changed, employers were asked by the IRS to change the withholdings. So a lot of people were excited because their check was a little bigger. Well, what happened was when they combined their incomes after getting these bigger checks all through the year, they really weren't supposed to get that bigger check all through the year. So that they have to do a new W-4 form. And, you know, I like the new W-4 form. That's the W-4 form. And I just want to tell everybody, go to the irs.gov and get that W-4.pdf. And it will show you the form W-4 for 2019. And it will have a worksheet for two earners or multiple jobs. And I know, Carl, you've heard of people saying, my part-time job messed me up on their taxes and stuff like that. Well, it's because they didn't do the worksheet. And I think it's really interesting because all of the answers to our financial challenges are there. But if we think that, these tax law changes, they jacked me up, that's not what happened. And we always have to look deeper into what happened during the year, because for the majority of us, these tax law changes can really work to our benefit, especially with the doubling of the standard deduction and with the majority of the Black community doing the standard deduction. But I must clarify that this whole discussion is to just empower everybody listening to talk to their tax preparer. Now, Afroeconomics is a financial planning concept, so that's why I talk so much about taxes and tax planning. But I don't prepare taxes because in all reality, my goal is to make sure everybody does their taxes on their own. But if you have a complicated situation, or you went through a divorce, or you're a widow, or then you may need to really go to a professional for your taxes. Like the things that we're talking about right now, you should have a financial advisor that tells you about the W-4 and tells you about why there have to be an adjustment. The members of Afroeconomics have been sending me the PDF of their tax return before they press the submit button. They're asking what happened. And then I point out to them that they withheld less federal taxes this year than they withheld last year. And in many cases, they've made some more money. So you're withholding less because they adjusted your withholding based on one income, that one income. So when they gave you a bigger check, theoretically, if you have joint earners, and that's pretty much what's happening, that people who have two people in the household are the majority of people who are wondering, and they're both earning money, what happened? Why do I owe taxes this year? And so that is happening, but it's not because of the new simplified tax code for the majority of the people. It's just that we need to make sure that we do more tax planning and that we fill out that W-4 form correctly and fill it out for the two earners or multiple jobs. The fourth page, that it has a workshop there for you and tells you what adjustments you need to make with the payroll office.
Well, let me ask you this, Jerry. Should you, at this point, everybody have, because we talked about this before, should everybody have a business instead of just doing the standard deduction, have a company and have the company pay you?
I mean, it would be great that everyone had that entrepreneurship enthusiasm, but I have seen entrepreneurship really mess up the financial house of many families. I'm working with the members now, and her husband started a business and it didn't work out. He decided to close it, and now her job is being garnished because of his business that he closed down and the debts that they accumulated. So we need to be very careful that and understand that with entrepreneurship, it takes so much financial empowerment. And that's why I have the entrepreneurship membership of Afroeconomics. And it is the seventh principle of Afroeconomics. And it is a serious way to build wealth if we manage it correctly. But I'm entering my 25th year as an entrepreneur. And Carl, it is hard. I am not sure that I would still be in business if I was not a financial advisor, because I am constantly on my P's and Q's about finances, and I still make mistakes with the business. So we definitely, if you're in a job that does something totally different and you don't understand that financial component and you don't have a good bookkeeper that's helping you. And a lot of times people go into business and they go, oh, well, my wife, she'll do the bookkeeping, but she doesn't know anything about bookkeeping. Just because she has time does not mean that she understands payroll tax withholdings and getting all the state requirements and all of the federal 940 forms, all of the different forms that will be needed to operate a business correctly. So I say that to say, yes, I encourage everyone to learn about having a business, but the best entrepreneurs are the people who have side hustles and have not legitimized them. So once you take that side hustle that you're already doing and you discover that Schedule C that allows you to write off those business expenses, and many of you have another job. So your job is supporting the business that you're building. You're able to use those expenses from the business that you have legitimized and reduce that W-2 taxable income from those business expenses during this development stage, because the business may be carrying a loss because you haven't developed it out. So you'll get the benefit of all that you're putting into the business. But
right.
Is it like this?
Let me ask you this, though, because I want to talk on a broader issue as well as taxes.
Sure.
Do you still see that there's going to be a downturn in the economy?
I feel very positive about the economy. I think there's so many opportunities for us going forward, that I think that we're missing out if we focus on the inevitable that things will change. There always will be ups and downs. But I think that what we need to do to prepare ourselves all the time is getting out of debt. Once you're out of debt, you can have that type of attitude that I have, that I'm saying I feel great about the future of the economy because I'm not a slave to it. So, but if your entire business, home, lifestyle is developed upon bill payments and making sure that you're always creating more and more income, then that will be, there will be a challenge for you, and you do have to worry about it. But And if you're in an industry or in a job that doesn't have protection, if you're in technology, if you're in something that is going to go forward for the next 50 years, we have to be progressive in our career and business placements. What will people always need? Can you provide that service that is inflation proof, that is economy proof? That is just, it's so needed, and I'm going to provide it with excellence. You're not going to have to worry about what's going to change for the government or if interest rates are going to go up slightly. If you don't have credit card debt, you don't have to worry about short-term interest rates going up. We have to.
Having said that, you know, I just saw a report, JB, that 7 million people are 3 months behind on their car notes. And they're saying that this is, this is a sort of a indication where the economy is going. Your thoughts?
I think that's horrible. You know, I really feel that we have to get out of the car note mentality. That I feel that if they were alive during the 2007, 2008, when we all got a smack in the face, that was enough for me to say that I cannot afford to have a car note as an entrepreneur. That if I can't buy it, I can't get it. And then if anyone, I guess, that would be in a car note mentality, they're really going in the wrong direction. If we're talking about 7 million people that are behind, that they probably have, a lot of other things behind, because people will pay their car payment and before they'll pay their mortgage payment. So
right. Hold that thought right there, too, because when we come back, we got to take a short break and check the traffic and weather. But when we come back, tell us what's the having a car note, and leasing. If you got a question about finances, this is a lady you need to talk to. Pick up Bryan, because otherwise you'd have to pay to get the information that she'll supply for you for free. I know some of you are concerned, don't want people to know your business. That's cool, too. Just use a different name in a different city. We're just trying to help you. Don't be bashful. 800-450-7876. Those are the magic numbers to get you in. Let's go back to JB. JB, I was asking you, because some people lease automobiles and some people, have car notes. At this point, which one is better?
It really depends on the person. I think that leases became popular for businesses because it was believed that businesses didn't need to put in the mileage if you were only driving it for business use. So, that leases have a limit on the mileage. And I find that to be the most irritating part of leasing a car, is that you're constantly worried about how many miles should I drive, or am I about to go over the miles? Regardless if you're a business or you're a person with the lease, because you know that can cost a lot at the end. And you can get out of it at the end. You don't have to worry about the value of the car having gone down or any of that with the lease. So that would be an advantage, that when you're going to be able to get out, and that you're going to be free and clear if you meet their criteria. But the advantage for purchasing is that at least you're going towards an end. You're going to have something at the end. So, but with cars, like I think if you compare that to renting a home and renting a car, you probably could be better off with, if you were, because I can't say a lease of a car is like renting a house, because you rent out the house and you clearly just walk away, I guess, unless you did some damage to it, but with the lease of the car, you're going to, if you go over the miles or you use it, like if you rent a house, you can use it up. You lease the car, you can't use it up like that, because they are covering themselves by penalizing you for using it too much. So we do need to be careful with the leases and realize the restrictions and what will happen, because in either situation, you can write it off as a business expense. From a business perspective, you can purchase it and the payment can still be written off. You don't have to, because people think, well, if I lease it, then I can write it off on my taxes for the business. You can do that either way. The question is, do you want to own that vehicle at the end of that period? Or do you want to always be in a position of keeping up with the technology, always having something new? Then the lease, and then that's a business perspective too, because the businesses always want to have theoretically the newest and the best and the cutting edge new car even for their fleet. So they might lease the cars for their employees versus buying it. But that's a good point. And it really depends on what your specific need is. But I think that most important thing is, I remember I was going in to do a lease and they said, oh, we don't charge interest rates. And I said, well, what do you mean? They said, no, we do what's called a money factor. So they wouldn't tell me what the money factor was equivalent to in interest rates. So I called a member that worked at a competing dealership and I said, what is the money factor of this amount equal to in interest rates? And this was like over 15 years ago. And then they told me the interest rate, and it was much higher than what they told me that it was for. And I remember I closed the deal down. I never went back to them. It was a luxury car dealership too. But so we have to be very careful in the wording of what they use and what that equals, because they could say the money factor, just as an example, they could say is 2.5 and make the money factor seem very low. And you're looking at that as an interest rate. But if it says money factor, it's not an interest rate. Interest rate is an interest rate. So the financing may say they could actually fool you. And unfortunately, there was a study done on people of color being taken advantage of with car purchases. I did a webinar on that over a year ago now, but it is true. So if you have to compare, you have to make sure you're comparing oranges to oranges. That don't believe the hype. Always check behind yourself. Don't get emotional, and try not to be so payment oriented and look at the purchase price in either way, in either situation.
Gotcha. 800-450-7876. We'll go back to the tax issue in a moment, but Minshaw's calling us on line 2. Minshaw, you're on with J.B. Bryan.
Yes. How you doing, Carl? How you doing, sister?
Hey.
I just want to kind of elaborate what you said, and it's actually the truth. I had actually got $3,000 extra on my taxes this year, and basically I did exactly what you said. Kind of paid attention to my dependents and things like that.
Great.
Kept everything up. My tax man, and dealing with him for years, so he was very reliable. And
Great.
one of the main things was that really caught me that you said that really helped me was my side hustle.
That's right. Good for you.
Filling out the proper brackets and things like that. And
Great.
That kind of put me up a lot. And then with the child
credit and everything. Yeah.
Care,
great.
Yeah, that
Great.
doubled. That had doubled.
Great.
So as long as your
True.
exemptions and things was intact and you paid attention to everything, you will see more.
That's right.
And
Well, let me interrupt you and ask you this, Minshaw. When did you do that? When did you make the change? Was it prior to the filing, or was it sometime last year?
Well, what I did, I just always paid attention and
That's
made
right.
sure that when every check, I look at my check and made sure that I still had my same amount of dependents and deductibles taken out.
Mm-hmm.
That way they can still take out that same money. I didn't want them to give me more money because I know at the end of the year I'm going to have to give them that money back.
That's right. That's right.
Yeah, so I just paid attention to everything and making sure that everything stayed in line. It wasn't nothing extra, because a lot of times everyone was happy because they saw that they was getting a little more in their check. So they, you see the money bi-weekly or monthly or whatever, so you get excited.
That's right.
But you don't kind of think about the long run.
That's right.
When I file these taxes.
Do you feel that you are capable, if you wanted to, that you could do your own tax return?
Yeah, I feel as though I can. It's just that I never, really sat down with no one.
Thought about it.
to learn. I was kind of, nervous about messing up.
That's right. And I'm really going to, within the next couple of weeks, check out afroeconomics.com and register, because I am in the next couple of weeks going to do a workshop on the free file option, because it's amazing the millions of people that qualify for a free file. And they said there's like over 100 million people. I had the exact number, but there's like millions of people who qualify for it says free file estimates that about 70% of taxpayers, roughly 100 million Americans, would qualify for the free tax filing process. So the incomes below, now, brother, you may not be able to get it free, but I'm just going to go on with this point because it's like exploding in me just to see this, that anybody with income below $66,000 can file their federal tax return for free. And it is so simple. The overwhelming majority of Black people do not itemize their taxes. So if you're just taking the standard deduction, it's your return is going to be extremely simple. And now with the standard deduction having doubled, there's going to be even fewer people that are doing have the need to even itemize, because they don't have married filing jointly. They don't have over 24,000 of itemized deductions to write off. So the point of this change is to make things easier for us to be able to do these things on our own. And I feel that I have a responsibility to help us take control over that, because so many of us pay tax penalties because we didn't do the return. There's people that probably can't afford to file the return, so they don't file the return. Then there's people who don't file the return, because they truly just don't know who to talk to. And so you have to make sure that you check out that the free filing. And then you just go to the IRS website, free file, do your federal taxes for free. And then you click in there and then boom, you'd be done. No waiting in line, no anything. We have to get empowered. I will argue that this new tax return system, I'm not even exaggerating, is easier than using the cable system for on demand and getting movies, and downloading and when you can access and then looking at the guide and which ones are HD and the things that we figure out. So people are like, I don't understand that. And then all you have to do is answer the question. And then you have your W-2. And then they tell you, box number this. What is the amount there? You fill it in. Box number 5. What is the number there? You fill it in. Boom.
Make sure you have a follow-up.
No follow-up.
No, but I'm so proud of you.
One more last thing. As far as the car, it's actually very beneficial to not have a car note.
That's right. That's right.
Yeah, that helped me a lot.
That's right.
I tell you what. Hang on a second, man. We got to take a short break here. I'll let you finish your thought on the other side. And
great.
If you got questions for J.B. Bryan, reach out to us. We're discussing money with financial advisor J.B. Bryan from Afro Economics. And here's the deal. What's going on? Millions of people won't get a tax refund this year, and they may have to pay because there's some changes in the tax law. Now, JB's not a tax person, but she is a financial advisor, so she can give you some advice on what to do. Before we left, we were speaking to Mansour, and his brother made the changes, and he's reaped the benefits. So you wanted to say something about car renting, Mansour?
And he was talking about car payments. He was like, it's better to not have a car payment, and I agree with them. I agree with that, too.
Mansour, you still with us?
Yeah, yes, sir. Yeah, it's much better because what happened is I always bought cars without the payments, but they wasn't like new or up to date.
Mm-hmm.
What happened? I was just trying to establish some credit, and with my religion is no interest, and it's hard to get any credit without interest. Mm-hmm. So what I did, I saved up enough money so I can bargain with them. So
good for you.
Boy, it was a 2015, it was around $18,000. So
That's
I went to
great.
a couple of places. They said, no, you'll never get that. We'll never do this with interest. So fortunately, I was one place in Silver Spring. It was a brother from Ghana. And I said, look, I got $18,000 to pay for this car right now.
Mm-hmm.
Told him, if you don't want it, somebody gonna get it.
That's
I'm gonna
right.
go to different places and somebody get it.
That's
so he
right.
did something, and they paid for the interest. I didn't have to pay no interest. I put down $10,000, and a year and a half I paid for it, and I got my credit score went up to 7-something.
That's right.
Almost
Good.
800. And my credit score was 500 before I had done this.
Wow.
Yeah,
Good job.
It was excellent. I don't have these extra bills. You're right. Everything you said was absolutely right, and I'm actually an example of it.
That's so good. It's so true. And it's not easy. And the key that he showed there was the discipline that is required and the humility that is required to build wealth. And we keep thinking, or too many people keep thinking, that you can build wealth by what you look like. So it attaches to that payment mentality, because you go, well, I got to fake it till I make it. I got to do this. No, what you have to do is be humble. And we have to realize, because too many of us, I know I have made that mistake of just thinking that it's okay to be in debt. And it's not. It is not okay. And that is what's killing us, because it leads to stress. And there's proof that people with bad credit scores are more likely to have heart disease, because what? They're stressing all the time. So we have to make that connection. And then when you mess up your health, then it cuts into your wealth even more. So we can't afford to not be the most disciplined people on the planet. We can't afford to try to look a certain way when we really can't afford to do that. It just can't. And we have to realize that you can't escape and finance it. The whole financing trips and paying for getaways on a credit card and having to deal with these, interest rate on a vehicle is nothing. The devastation that credit card debt has had on our community, is a whole nother level of it's just sad. And the credit scores that have been destroyed because of consumer debts, of things purchased with credit cards, it's really sad. So yes, the discipline to
let me
wait.
interrupt you and ask you this question though, Jerry, because people don't tell us what to do with the credit. You're in college. I mean, sure.
That's
Thank
right.
you for your call. They hand you all these people are, the
That's
first
right.
day they're giving out these Visa cards, and all of a sudden you've got $200 credit immediately, and you go, wow, I got, nobody tells you how to handle it, and within a month you're behind.
That's right.
At some point, do you think they should be teaching finances in high school so that when these students, before they graduate, they know how to handle and deal with credit?
Well, that's just the truth. There is there's very little connection between education and wealth because of that. That we make higher incomes because of your education. But the ability, what the brother was talking about on the phone was about wealth. Now, I don't know if he's a college graduate or not, but he sounds like he's just a straight hustler, wise, humble, a disciplined person, and you don't learn that in school. And so what we need to realize is that until we know what to do with the income that we make, then we're not going to build the wealth. We need to have a connection with income and wealth. And that is where only wisdom and discipline will make that connection, where the wealthy Black person is also the educated Black person is also the wealthiest one. But instead, it just gets us jobs, and then we get in debt. And then so when they do the debt analysis or the wealth analysis, we have assets, and then we have debt that exceeds the asset value. So we have negative net worth way too often on highly educated people. So can you teach me that? No, I think it's something that we've picked up from generations of trying to create a particular look. And then, so I definitely, and the dislike of appearing like you don't have a lot. So we buy into that. So and I think that we need to realize that we have to revamp a lot of the thinking and put that into our kids, that you have to, get work for everything that you get. that nobody owes you anything. And just because somebody else has more than what you have, until you earn that right to have it, you can't have it. And you don't know what they did in order to get it, but you don't have anything to do with that. But so when they give you that credit card and you go into school, you have to equip that child, that parent has to equip that child with, that's not your friend. You don't need that. I have it right here. Here's our joint debit card. That's all you need. You don't need that debt. You don't need that. You're going to build your credit a smarter way. You don't have to. Right. Credit cards.
But I want to jump in here, yes. JB, because he mentioned side hustle, just like what you did, yes. Side hustle.
Yes.
Do you think everybody out there now, everybody who's listening, people on the way home, 4 o'clock, they just got up, they should have a side hustle? They should be going to another gig maybe after work or on the weekends?
Well, I would say that, but that would be a ridiculous thing to say, because half of the people, or more than half that are listening, are just going to go home to watch television. But the other part of us are going to continue to hustle. So I'm only talking to the hustler. I'm talking to the person who is hustling, working, taking pictures, fixing up toilets, putting down carpet on weekends, cutting lawns, and you haven't realized the tax advantage of that activity. That's the one I'm talking to. Because no, I can't make anybody into that young man that was on the phone. I can't make someone that he was like developed in that over time. If you look back generations, people, his family, everybody's like that. So what we have to do is the hustlers have to pull themselves out and realize and refuse to be broke. And until you realize how to get your hustle, as he said, to work for you, you're going to be a victim. And you're going to have that job, and you're going to eat it all up in taxes, and you're going to sit there and watch TV and eat bad food. And it's just going to be a continuous bad cycle. And you're going to feel like a victim, and you're going to watch the news, and you're going to be mad at Trump, because you're never going to feel like you've ever accomplished anything, because that's the way, unfortunately, the world has programmed to focus on us, that there's always something wrong. But a hustler mentality says, I'm going to make this world work for me. I'm going to get everything I can out of this new tax code. I'm going to legitimize this, and I'm going to sit there and I'm going to work on making sure that I live within or below my means. And if I work for someone, I'm going to save. Like you can even be the couch potato. You can still make money and build wealth and reduce your taxation by reducing your taxable income by that 20%. You should be maxing out that $19,000 in that work plan that you can put away every year. They've increased it. Now you can put more money away forever. If you're over 50 and over, you can put away even additional money. So we have to take advantage of the things that are available for us. So you reducing your taxable income is just as good a movement as legitimizing your side hustle and doing that. And Lord, the person who can do both, reduce that taxable income by taking advantage of the deductions that are available to you at work, like getting into plans where the cafeteria plans, which will withhold the dentist bill and all of these different expenses that you have during the year. Some people, their jobs have it. But all of these, Carl, require discipline. Do these things pre-tax.
Well, let me answer this, because I know some people who are older now, and they did not, care about money when they were much younger. Now they're here living to regret it, because now they're on Social Security, and it can't really make ends meet for them, and they have to go back out into the workforce. As you know, when you get over 50, people are not going to hire you.
That's right.
What sort of suggestions do you have for those folks?
And then some places will not hire you when you're over 50, but I feel that you have so much more to offer when you are grown. And grown folk, need to really take heed to this discussion, that you have to learn to not spend like you used to when you were working every day. If you're at a point where you don't want to work all the time, don't spend all the time. Don't go and buy timeshares that you can't afford. Don't go and buy another car because your friends have a car. Don't put yourself in a hard position. Carl, the most poverty-stricken people on the planet, unfortunately.
Hold that thought right there, JB. I'll let you finish on the other side of that. We got to take this short break and check the traffic and weather again in the DMV.
The Carl Nelson Show is here daily, 4 to 7 p.m. on WOL, News Talk 1450 AM and 95.9 FM.
And thank you for staying with us, folks. Our guest is financial advisor J.B. Bryan from Afroeconomics. We're talking about money, especially folks who are going to file your income tax and expect a return. Well, listen, many of the folks are not getting as much money. In fact, some people are being required to pay the government back some money. And JB has some tips on how we can mitigate that. Before we get back to it, though, let me just remind you, coming up at the top of the hour, we're going to speak with Professor of Critical Thinking. His name is Dr. David Horn. And later this week, in the next few days at least, some of the folks are going to be here. Dr. Francis Quest Wilson's mentor, Neely Fuller Jr., also Dr. Kabe Kameni, some of you know as Booker T. Coleman. He's been in all the Hidden Color series. And also world traveler, Dr. Renoka Rashidi is going to be as well. So tell all your friends if they're in the DMV to keep their radios locked on FM 95.9 and AM 1450 WOL. So, JB, before we left for the traffic update, you was going to tell us a story.
Yeah.
So I'll let you finish that.
Well, I was just referring to, I think it's important to really talk about what wealth is. What wealth is. Now, wealth is cash in the bank, stocks, bonds, real estate, minus debts like home mortgage, auto loans, credit cards, and student loans. So if we're looking at, that's what wealth is. If we're looking at that, then it's not surprising when you look at, there was a study on racial disparities in net worth. And it says that median, the single white woman in the prime of her working years, age 36 to 49, had a median wealth of $42,600. And that's still 61% of the single white male. But the median wealth for a single black woman was what? Guess.
I have no idea what.
$5.
Ooh.
Essence magazine said $100. But that it's because we don't understand what money is. We say, go to school, get a degree by any means, going into all this debt. So all of a sudden you've already busted your wealth, and that debt will follow you for a school loan. I have people whose school loans are being taken from their Social Security check. So some of the people that you were talking about who are saying that, they're seniors, they're getting their Social Security check and it's taking money back to pay for their master's degree. And or their undergrad or whatever. They said, well, I want to get this later or whatever. And a lot of people are getting it so late in life, not realizing they will take your money. That's a government loan. They will get it. So that we have to be aware of how do we actually accumulate wealth? And I feel that the key of it is, especially for us, is to avoid the liabilities, avoid that long list, credit cards, student loans, mortgages, auto loans. Like we have to avoid it being extreme. The same survey said that a black woman was like 5 times more likely. The recent financial data collected said that they were a high cost. Black women in general were more likely to participate in subprime mortgage crisis, with upper income black women being 5 times more likely to have received a high cost mortgage than upper income white men. So we were more likely, I'm talking about me, that we were more likely to go into unnecessary extreme debt. These material items cannot be our comfort. And you see how, but yet we will look at the distraction. Like to me, I see worrying about taxes as a little thing. Because you can't pay the taxes that you owe because you've spent everything you made during the year. What if they didn't withhold anything? Because all they're doing is doing your favor. They're just withholding this money for you during the year. But this is the amount that you have as a citizen of this country promised that you are going to pay to the government to exist on these roads and these businesses and everything that supports the society, our little world in the United States. You got to pay it back. But so the employer is withholding it for you, and you have a responsibility to fill out that W-4 form. You don't even have to do any tax strategies, really. If you do the withholdings correctly during the year, according to what you're making, and if you have 2 households, do the worksheet and figure it out what needs to be withheld correctly at both jobs. You can't have one person making money and not withholding any money. And people do that. And they go, well, if I do that, I'm not going to be bringing home any. Well, if you do that, somebody is going to carry that tax burden. So couples have to be a team. I'm doing a workshop on Wednesday night, free webinar about the importance of who you choose to be in a relationship with. Because your spouse is so important in how your wealth development over time. The research, these psychologists did research this year about the impact of who you marry on. So as Valentine's approaches, be aware of the fact that your tax issues have to be a team effort. If you're married, they have to be enthusiastic about solving this problem, not just the one who's in their car right now listening. You need to make sure.
Let me jump in here
Yes.
and ask you this then, JP.
Mm-hmm.
So if you're thinking about hooking up with somebody, did you ask them for their credit check?
Yes, and you definitely need to know if you get in a relationship, you marry somebody who has a tax liability, that becomes your tax liability. And I'm not saying that you don't need to love, because you do need to marry who you love. I totally believe marry who you love, but you have to realize the reality of it is that you are marrying into their financial habits. So in their credit report and their tax issues, or their lack of discipline or their discipline. If you know you're a loose cannon and you like to spend money the way you want to spend money, please avoid getting married to a person who is determined to be wealthy, because you are going to end up in a divorce, and that wealthy-minded person is going to lose a lot of money because they married you. A divorce will devastate your wealth. It will, and you cannot play with that.
You heard that. 800-450-7876. Line 2, Marilyn's calling us. Marilyn's calling from the district. Marilyn, I'm with
Yes.
JB Bryan.
Oh, thank you very much, JB. This is a blessing. I would like to know about Medicaid liens. You were mentioning how they'll snatch your Social Security for a student loan. And recently I read an article where this elderly couple, the husband passed and they put the wife out the house. They had Medicaid due to an illness.
Yeah, Medicaid doesn't play. So if the assets were not included, or somebody didn't tell the truth, but as far as like you got to look at the details in the story, because even to get approved for those things, they don't include your residence. So you can have a $1 million house, and if it's your primary residence, you still could get approved for Medicaid, not just care, Medicaid, because that's your primary residence. You have to live somewhere. So you could have inherited $1 million house, but you have no income. So you're still going to get to, how that situation came about, it has to be a deeper story.
Oh, I don't know. I was in probate, and I came across the information. I don't know if it applied or not. I couldn't find too much information.
Not to you.
Then when I read this article again, I didn't know if any time in your life, if you had Medicaid, they can go back and put liens on whatever you own in the future.
Yeah, we're talking about the government, so anything is possible. But if they find out that you lied in some way, I'm sure they could go back and get it. So if a person,
article, there was an elderly white couple, and the woman was making a warning to everyone in this article because, I don't know, her husband became ill at some point. They both worked mainly she was a homemaker, but they both worked, and he became ill at some point in the marriage, and they were married a long time. And when he passed, Medicaid put her out the home and said that they had a lien on the home. The daughter fought, and they allowed the wife to stay in there until her death, but the government owned the house because he had to apply for Medicaid at some point during the illness. And they had worked and owned the home.
Yeah, and that is a good point, but you don't have to get rid of that residential property, your primary residence, but that's a good point. That doesn't mean if you receive that you don't have to actually after your death that it could become theirs. That is a good point, because they're not going to put you out of it while you're living, but they could actually get to that asset, after your death. But
let me jump in here, JB. So is there a way that home could have been protected?
He would have actually had to plan for that early on. The reason that his wife was about to get put out, that's confusing. You know what I mean? To me, I don't know if they were somewhere like they got married late in the game but there's definitely a way to try to get, change the naming on the asset, but it would have had to have been done, I think, more than 5 years before he actually needed that intense type of help. So, and so if he had like his kid's name on it, then, and they weren't involved in, if he actually gave it to his kids 10 years earlier through estate planning. And then that's why, estate planning can be important, but it also is, that's why we need to have long-term care insurance. And that's why we need to get those things while we're young and healthy. And there's also ways that you now can do advances on your life insurance. I have this life insurance policy that my clients love, that you can take the death benefit out while you're living and you can use it to pay for long-term care needs. So you definitely need to look at the changes that have been done, because long-term care insurance can get expensive. But this is literally, the example that you can actually, lose. If you're not broke, you can lose everything that you have. I know people that are just average people that are paying $10,000 for their parents to stay in a nursing home. $10,000 a month.
One quick thing that concerned me, they have a lot of young black people, men especially, on dialysis now. And they instantly provide, I know in the district, Medicaid and Medicare. And the price is ridiculous. And I was concerned with future property ownership with that long-term care. So young already, can they already put that Medicaid lien if you try to acquire property, or the home is put into your home as your name as an inheritance?
They can't get anything. Like, I had a client who she received a settlement for a wrongful injury from a hospital. And when we were in the settlement, the lawyer took $500,000 to pay back Medicaid. I thought that was devastating, but because she got that money, you know what I mean? She had to pay it back to them for everything that they have been paying to protect her out of the settlement. So they don't pay. They don't play.
In a trust fund could that have stopped it, or at least mitigated some of the cost?
Like if she had she did have but not that, because before you can put it in the special needs trust, good point, Carl, that you have to actually settle that, and they get theirs first. Then she got the special needs trust that can be used for someone in that situation. That's what you're referring to, and that is a great idea. But if you get a settlement, you got to have that money set aside for the government. They're coming to get it. Medicaid says, I'm poor and I don't have anything, but I can keep. You're gonna let me Medicaid, and then they're hang on, they're paying for everything.
If you have a follow up, stay with us.
Welcome to the Carl Nelson Show on Washington, D.C.'s 1450 WOL Radio and live around the world on WOLDCnews.com.
If Marilyn, do you have a follow-up question if you're still with us?
But let me share this. I found something that says Medicaid is the most common way of paying for nursing home costs. When you apply for Medicaid for nursing home costs, they will count your assets to see if you qualify. They do not count the value of your home. However, there is a trap here. Even though the Medicaid rules say that you can keep your home is exempt. Like I was saying, this asset is not counted when you apply for Medicaid, but once you are on Medicaid, they may be able to put a lien on your home. A lien is like a mortgage. It will guarantee that the government will be paying paid back money that they pay for your nursing home costs. And then a way around it is, like I was suggesting, that you get in relationship with your kids and set up a life estate. And that means that you can live in the property for the rest of your life, but upon your passing, it would go on to the children. So, but you have to do advanced planning to do that. That's why financial planning is so important. That's why the financial planning has to include the tax planning, the estate planning, the legacy planning, all of the stuff that we talk about, Carl. We're having a power talk today.
That's right. But tell us again, because, folks are probably thinking about doing their taxes, and many of them have been shocked. Some have been, they're getting less than they usually get.
That's right.
Previously. Some have even been forced to pay back the government money. I know some think that's weird that they have to actually pay money. So how can they avoid that? Can they make the changes now, or should they have done it last year?
You can't change first of all, you need to make sure that you review it. Stop just pushing the submit button because they said that you owe it. Ask them for a PDF. Get that. Look at it. You have time. It's not the 15th yet. And let's talk about it. Get someone that you trust to help you go through it line by line. Join Afroeconomics. Let's look at it line by line. If you owe thousands of dollars, it's worth you looking at what they could have done wrong, because a lot of the tax preparers are not planners. They're just entering the data that you gave them. But you would be amazed at how many people that have incorrect W-2s or have mistakes. They didn't put their cost basis on their investment distribution, or they had the wrong code on the investment distribution, and they were disabled, but they didn't put that on the coding of the withdrawal. All of these things are important, and we pay so much money unnecessarily. So don't just accept that you owe a lot. Make sure you analyze it thoroughly. Don't give up. But definitely it's good. Everybody do their return now, because there was an adjustment that was done on the payrolls. So you probably did see an increase in your paycheck, which means that you probably you stopped withholding as much as you should have been. And if you do joint filing, both of your incomes come together and it puts you in a different tax bracket. Or you have 2 or 3 jobs and you put the money together and it puts you in a different tax bracket. So be careful. I'm glad you had this show, Carl.
But can you make the changes now before you file taxes? Will that make a difference?
It'll make a difference for next year. If your withholdings, if your W-4 needs to be updated, it will make a difference for your 2019. But you can't change that. You can't change what you didn't pay ahead of time, but you can make sure that there are no errors, that there's nothing being overlooked, or you didn't do your expenses correctly on your Schedule C. If you do have your side hustle, you need to include it. If you have real estate and you're not doing the income correctly, if you have capital gains and you didn't do it correctly, you need to know these things as well. So don't just accept that you owe more, because if you owe more, most likely it's not because, and I'm just saying, there are some people who this tax change may have really hurt you. If you have huge property tax that you pay or huge mortgage interest that you pay, and there's limits on that now. But for the overwhelming majority of you listening, it's not because of that tax law change. And I want to encourage you to become more confident about doing your taxes yourself, so that you can get an understanding of what's deductible and what's not throughout the year, so that you can start taking advantage of the way the tax system is set up.
So the mortgage interest rate and the taxes are still deductible for this year?
Yeah, but those are for people that itemize. So with the standard deduction being increased, a lot of people are not going to need the mortgage interest to help them. And for the overwhelming majority of people, they don't even realize it. Their mortgage interest has not helped them. And I'm talking about overwhelming percentage of homeowners are taking the standard deduction, but they've been itemizing and they didn't realize it. They just did that A and they showed it, and then it said, oh, well, you didn't have enough itemized deductions, so we're taking the standard. But because they asked you, what is your mortgage interest, you actually thought that you did that. But if your mortgage interest was, say, $6,000 for the year, you're married filing jointly, the standard deduction is $24,000. Are you going to take that $6,000 itemized? No, you're going to go with the $24,000 for the, standard deduction. So, and that's been happening over and over, and we don't really realize it. We just do the item, and you're excited, and you go, oh, and I gave $1,000 to charity, and I did $5,000. You still aren't over $24,000 married filing jointly. $12,000 for single filers. You still haven't gotten. So you're single. You got $6,000 of itemized. You still are going to the standard deduction. That's why it's so simple now. Because if you don't have what you gave to charity, and you don't have huge amounts of medical expenses, and you don't have a great big mortgage interest that's going to exceed the standard deduction, then you can do that return yourself.
Yeah, but would you get any money back, though, if you don't itemize?
Oh, yeah. Oh, yeah, definitely. The standard deduction has doubled. That is going to increase, especially a person that has already been just taking the standard deduction. Their chances of this benefiting them is very high. Yes, you can still get money back. Itemized. Most people don't have, married filing jointly, have more than 24,000 things to itemize. That they don't have that much. And, I'll see it like some people will give like $10,000 to charity and $10,000 in mortgage interest, but then it's still $4,000 there, $4,000, the standard deduction is still bigger than that. No, and they may have some medical expenses, but it doesn't go over 2% of their adjusted gross income. So even the medical expenses have limits based on, your adjusted gross income and calculating that correctly. So, there's no excuse for us other than there's a lot of people who the adjustment was made and they're not withholding enough on their tax return. They're not happy with the politics. They see that increase and they think that it's because of these new tax laws. But there are some people that it applies to, but that's a very small number. Most people, it's just that they didn't hold enough, or they took out a early retirement withdrawal. If they want to really, or they stopped contributing to their retirement plan as much, they got a raise and they didn't increase what they're putting into their retirement plan. That's why percentages are good. You want to save 20% of your pay. When you get a raise, it'll still keep saving 20% of your pay.
All right. And we're coming up on a break real soon. And before we let you go, though, you're going to have a webinar or something taking place soon?
Yes, I have absolutely free things going on. Just go to afroeconomics.com, register. There's a little square in there. Put in your information. You'll get all the invites on next Saturday, not this Saturday. The next time I'll let you have your little love weekend this weekend. Next weekend after this, I'm doing a 4-hour living the Afroeconomics lifestyle, going through all the principles, giving out a free workbook. Afroeconomics has a workbook. You register. I'm going to send you the free workbook that you can fill in, and we can go through step by step. I had to expand it. It was only 2 hours, and I was like, this is not enough time. So we're going to do 4 hours online in the comforts of your home, and let's get it done. I just did it a weekend or 2 weekends ago at 700 12th Street, DC, my office, and we did it there. And then I'm going to be taking it on the road to New York and taking it back to Virginia. But I want to focus on those 10 principles: credit confidence, entrepreneurship, legacy, all of the principles of Afroeconomics, determination, Black health, and Black wealth. We've got to get that done. It's absolutely free. Get empowered. Not to mention, there is a free Afroeconomics membership, and I am focused on making sure that we do tax planning throughout the year. And don't forget the workshop. I'm telling you, Carl, I'm doing this on why we should do our own tax return. And that free file option based on income, but they're saying that there's millions of people who qualify for this free file option. So if I know them, I'm going to make sure that they feel empowered. We got to understand this. There's no way around it. You know.
Okay, we got to let you go. Before we do that, how do they get in contact with you? What's the easiest way?
Do 1-844-JB Bryan, 1-844-522-7926, or email me or call 1-833-ASK-AFRO or JB at afroeconomics.com. Go to afroeconomics.com. It has so many ways. Just click the chat, register, take advantage, go to the events calendar. You know, it's about your financial empowerment, and sign up for the free membership.
And we got to run, but thank you, JB.
Thank you so much, Carl. Love what you're doing. Today's podcast was powered by JB Bryan Financial Group, a registered investment advisory firm and the home of Afro Economics in Virginia, Maryland, Washington, D.C., and New York.